The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Today's episode of Market Talk is brought to you by Growmark FS. Keeping up with the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions bored of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. Well, as we take a look at the market trade action that we saw on Friday, wrapping up the week, corn a little bit firm with another sale to China, the wheat market rebounding, soy complex under some pressure though, livestock trade relatively quiet, still got a lot of outside market concerns and more. Here to talk about it with us, joining us on Market Talk once again, pleased to have Kent Beadle with Paradigm Futures here. Kent, great to catch up with you, sir, and I hope your week is going well. Thanks for being with us on Market Talk today.
Quite a week. Other than the stock market portfolio that probably isn't as good, but the grain markets are very interesting. There's a lot happening. We got an enormous amount of new interesting information from the CFTC this week. We obviously had sales to China in corn. We had a nice rebound in wheat. Lots of stuff going on, and very, very entertaining, interesting week that we've had.
Very true. Well, Kent, let's dive in. Let's talk about that CFTC data first. It felt like a lot of the fund positioning and movement really was an influence on Friday's trade across the grains, whether you talk about corn up a little, wheat seeing some good movement, soybeans moving lower. It feels like just some of that fund positioning really led to the trade action in grains on the day.
Commentaries from many different analysts believing that there was still a very sizable long in the marketplace. I'm someone that likes to follow open interest. Noticed that in part of that really large break that we had back in late February, that open interest was declining rapidly. And in fact, it did almost end up being a one-for-one liquidation. We saw open interest go down 135,000 contracts over the same period where they liquidated out about 140,000 contracts. What was more interesting is that as we made new lows going into early this week, open interest in the last week and a half was starting to increase. And what that tells you is that there were new shorts in the marketplace. It's going to be interesting when we look at this afternoon. We assume that the CFTC is going to get caught up here at 2 o'clock or 2:30, but we may see an actual net short in the market. And so, going into a long weekend, all of the markets, wanted to resolve some of the positioning that they had because of the uncertainty around the whole contagion with the banking systems, and when you have uncertainty like that, people tend to want to get even very quickly. Now we're big believers that there's still a fundamental story here in grain, but it's not surprising, for example, that we would see soybeans be the leader to the downside, because that CFTC information told us that while we liquidated out the corn, we were short the soybean, or the wheat, excuse me. The soybean position was still near record long, and not surprisingly, seen a couple days of pretty heavy liquidation as a result of all the concerns in the outside market.
Well, you mentioned those outside market concerns, and obviously it just has made these markets the last couple of weeks very headline driven. As you think about all of those concerns, Kent, how does that play into the commodity trade as we wrap up this week? And just your thoughts with, how does that influence maybe some of our risk management thoughts here with all of this outside headline pressure?
there's a couple different things about that. First of all, kind of as I said earlier, the speculative trade likes getting even with all of the uncertainty. But you should take a look at a couple of other things that are going on here. Number one, interest rates this week, fell dramatically. And with that, the value of the dollar fell dramatically. So we actually ended up having something happen that should be, all things being equal, a little bit supportive to our commodity prices, at least in terms of our ability to sell our grain at a little bit cheaper price or a little more competitive price on the world market, which of course leads to the fact that off of the break that we'd had and now the currency pullback, not surprising that China might show up 4 days in a row to buy some corn. We are the cheapest corn in the world right now. Might anticipate that some of the strength in wheat over these last couple of days could be some wheat sales that got booked that might show up in next week's export sales report. We didn't have any announcements, but usually our wheat trade, is a cargo at a time and not amounts over 100,000 tons. So we don't generally see the daily reports on the wheat. So, we have those things going on. From a risk management standpoint, that's a little different story. And of course, as we're working with our growers, we have to pay attention to the fact that corn prices at, certainly at our recent highs, and even soybean prices as we were, at or above $14, it did show some profitability, and we don't generally recommend being 100% sold this early in the game. We've got an awful lot of weather yet in front of us. But as we're wrapping up the pre-plant time period, we're always recommending 20 to 30% of the crop be positioned with some sort of downside protection. And then we're going to add to that and maybe reposition some of these spreads on breaks. But we're going to add to that position as we get into the weather markets that we expect that we're going to have this spring and summer. And with that gets you into weather. And I'm sitting up here in Minnesota with 2 to 3 feet of snow still on the ground on the level, and cold temperatures and more snow on the way. And we really have a hard time believing, at least here in the upper Midwest, that we're going to be early, and we got a real risk right now of being late.
To that point, I've heard some of that talk as well with growers across the entire upper Midwest and northern plains. If we see late planting, what is that going to do for spring acreage? Will we see changes? Will we be forced into changes? Will we see prevent plant? One has to wonder what things like that. I know we're kind of crystal balling here a little bit, Kent, but what could those things possibly do in the broader scope of this market trade? I think that's something interesting to kind of keep in our back pocket a little bit.
First time that they gave us real balance sheets here at the end of February. They're going to be pretty conservative unless they have a real strong reason that there's a lot of excess water. And of course, excess water hasn't been what we've been dealing with these last couple of years. So they're not going to assume very much in the way of PP. And so we essentially were given by them a sort of a full complement of total acres. I think it was maybe 318 million or thereabouts that total to all the grain. If we stay cold, stay wet, you're going to likely see some PP acres, especially in northwest Minnesota. Parts of North Dakota in the valley, parts of South Dakota have a tendency to be a little bit higher, or have PP just a little bit more often. That's where we tend to see it. I do note that the 30-day forecast and the 90-day forecast tend to be a little bit wet for the eastern corn belt. That makes you wonder just how quickly they're going to be able to get in. I wouldn't necessarily be worried. They were pretty dry going into the fall, and they had a dry winter until these last maybe 4 to 6 weeks, and so they're probably happy about the soil moisture recharge. And in fact, to be frank, the upper Midwest farmers are happy about the snow and the soil moisture recharge as well. But the clock is going to be ticking here once we get to the 1st to the 15th of April. And, everybody would like to have things planted in early May in order to maximize their yield potential.
Well, Kent, we should talk livestock as well. Just your thoughts on this cattle and hog trade. I know cattle, maybe a little positioning ahead of Friday afternoon's cattle on feed report. Hogs, there's been some technical damage just done to these charts the last week or so. Walk us through, what are you seeing in that protein sector as a whole, Kent?
Initially, I would tell you that there is just more concern, again, going to the outside markets and the whole worry about consumer sentiment around these bank failures. I mean, what's going on at the banks? Well, depositors are pulling out money because they're scared, right? Well, that says that there's a certain mindset from the consumer, and that's the same type of mindset that might have a consumer moving down the chain a little bit in the quality of meat that they purchase, that may end up skimping a little bit because they're concerned about their economic situation. And I think that's part of what was driving our protein markets this week. And then again, you've got in cattle specifically, you have a very large speculative long position, and no different than what we're seeing in the soybeans, what we saw a few weeks ago in the corn. I think there's some exiting going on ahead of this big report and ahead of an important weekend. I think a lot of people are wondering just what's going to happen with the banking situation as we come to work Monday. In the hogs, it's been a little bit different in that the cash markets have really not followed through with the seasonality that we normally see at this time. Okay, we're generally into a fairly sizable rally in cash hog prices that occurs, from the lows in December, January, as we start moving on up towards summer highs. And we just haven't really seen all that much in terms of higher pork prices. We've been going higher, but it's been slow, steady, a little bit methodical, and in a lot of cases, in a lot of days, we just don't go anywhere at all. And we're not going higher at pace to reach the sort of premiums that we had been seeing in the hog market when we had summer hogs up in that 105, 106, 107 area. And so we've seen some pretty sizable contraction. And with that comes some speculative liquidation in the link that we had in the hog market as well. I think we may be overdoing it, quite frankly. But marketplace is going to want to wait and see here whether or not we can get through this banking contagion without more issues.
Well, Kent, great thoughts and analysis as always. Before we let you go, any final thoughts for us? Anything else you want to reiterate for listeners here as we wrap up the week of trade?
Our clients about historically, we do see rebounds in the spring and summer on new crop corn, new crop soybean prices. We've exceeded our January high in corn 31 of the last 33 years. I think it's 32 out of 33 years in November soybeans. This is a good time to be doing some risk management, but at this point in time, what you may want to be doing is converting, short hedges into put spreads, and or you may want to come back in and own some calls or even some purge calls so that you're well positioned for the next rally, the next weather rally that we might expect in later March or April, May, so that you make those sales and pull the trigger on the next time we get that opportunity.
Fantastic. Well, Kent, if folks want to reach out to you and get some advice there, Paradigm Futures, what is the best way to reach you?
And I can be reached directly at Kent Beadle, all one word, KENTBEADLE at gmail.com.
Well, we appreciate the time as always. Kent Beadle with Paradigm Futures, thank you for joining us here today, sir. Have a great weekend, and we'll talk to you again soon.